know about your ex? Well, to not make the same mistakes again. Similarly, knowing about the history of stock markets will also help you in avoiding big mistakes and losing money. Hi everyone, this is Shrishti Gosavi and today we are going to dive into the historical performances of major indices and what we can learn from it. First, the dot-com bubble of the late 1990s. The Nasdaq Composite Index soared over 400% from 1995 to 2000, fueled by a frenzy over internet companies. But when the reality hit, the index plummeted nearly 78% by 2002. This dramatic rise and fall reminds us of the dangers of speculative bubbles. It's a classic case of too much, too fast. So let's be cautious and not just happy about a rising trend in the markets. Moving to the global financial crisis of 2008, the BSE Sensex in India wasn't immune. The index dropped from around 20,000 points in early 2008 to nearly 8,000 points by October, a decline of more than 60%. The crash was triggered by the collapse of major financial institutions and the housing market crisis in the US. The key takeaway? Global economic interconnectedness means that shocks in one region can ripple across the world. Then came 2020, a year marked by the COVID-19 pandemic. Global indices, including India's Nifty 50, experienced sharp declines. The Nifty 50 fell by over 30% in March. But what's notable is the swift recovery by the end of the year. The index had rebounded and even reached new highs. This indicates to the resilience of markets. Looking at these events, one overall trend becomes clear. While markets can experience significant volatility in the short term, they tend to recover and grow over the long term. The average annual return for major indices like the S&P 500 and Nifty 50 has been positive over the past few decades, with long-term uptrends despite periodic downturns. So, what can we learn from these historical performances? First, markets are inherently volatile and downturns are a natural part of their cycles. Second, diversification helps mitigate risk. Don't put all your investment in one sector or region. Finally, patience and long-term perspective are crucial. Staying invested through downturns can often lead to strong returns when markets recover. In summary, while history doesn't repeat itself exactly, it often rhymes. By understanding past market performances, we can make more informed investment decisions. That's all for today's video. Stay tuned for more such insightful videos.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.